Hi, my name is Aaron, and today I will walk you through the acquisition of GW Pharmaceuticals by Jazz Pharmaceuticals for $7.2 billion. Let's start with some background information. On the 3rd of February, Jazz agreed to acquire GW for $220 per share, and that consideration consists of $200 being paid directly in cash and $20 being paid in Jazz's share. The total value of the deal is $7.2 billion or $6.7 billion net of GW's cash, implying 13 times EV to revenue multiple. The cash portion of the deal is going to be funded through a combination of cash on hand and debt financing secured from Bank of America and JP Morgan. This transaction is pending GW shareholders' approval and certain regulatory approvals, and is expected to close in the second quarter of 2021. The other thing to take away from here is that Jazz is paying a 44% premium to where GW's shares were trading 5 days prior to the announcement of the transaction. This is a relatively good value when you look at the rest of the market. JP Morgan, Bank of America, Evercore and Guggenheim advised Jazz on the transaction, and on the other side of the deal, Centerview Partners and Goldman Sachs acted as financial advisors to GW. Now let's take a closer look at each of the companies, and let's start with Jazz. Jazz is a biopharmaceutical company based in Ireland which develops and commercializes treatments. It mainly focuses on neuroscience, including sleep medicine and movement disorders, as well as on oncology. It actively looks for novel compounds and molecule advancements in order to help patients with serious diseases. In terms of its financial performance, Jazz performed really well, and as you can see from the chart, its EBITDA kept growing from 2015 onwards, at the rate of around 9%. Its share price also grew over the past year, reflecting the group's strong performance. Let's stop for a moment and think about what differentiates Jazz from other similar companies. Jazz offers some very unique treatments. It has its own pipeline of therapies, for example, for the treatment of excessive daytime sleepiness, lung cancer, and leukemia. And this is Jazz's main competitive advantage. Let's now move on and take a closer look at GW. GW is a biopharmaceutical company based in the UK which develops and commercializes innovative treatments from cannabis. In particular, it looks into CBD, CBDV, and THC, and the ways these substances can be applied in treatments of epilepsy, autism, and brain injuries. GW's scale is really impressive. Its medicines are approved in over 40 countries, and there are currently over 8,000 patients involved in clinical trials. Despite the scale of GW's operations and the level of investment, it hasn't made a profit in the past 5 years. However, we have to bear in mind that time to market for new drugs takes even a few years. Its share price was volatile over the past year, with neither a strong upward or downward trend. One of the main advantages GW has is its Epidiolex treatment for epilepsies. It is a very unique treatment and it is safe and effective in children under the age of 1. There are also 2 other competitive advantages that GW has that I would like to highlight. One of them is yet another unique treatment, which is called Sativex, and this treatment is for multiple sclerosis. The other thing is that GW has about 60 drugs in quite advanced phase of clinical trials, which means there is soon more to come on the market from them. So now when we know more about both companies, let's take a look at the strategic rationale of the deal. First of all, the deal will enable Jazz to diversify the neuroscience portfolio by adding a new epilepsy treatment to the selection of drugs that they offer. Epidiolex has a blockbuster potential and its global launch is underway. In 2019, it generated $300 million in sales and $500 million in 2020. And last but not least, Sativex, the multiple sclerosis treatment, also has huge potential and is currently in stage 3 clinical trials in the US. Let me summarize the main takeaways from this deal. First of all, takeover of GW by Jazz is the biggest transaction in the cannabis industry to date. And the number of deals in this sector is likely going to go up in the coming years, as the Congress is pushing for cannabis reforms. Secondly, the estimated value for this industry in the US, if legalized, would be $115 billion by 2030 and $50 billion without broader legalization. So it is huge. And because of this lucrative market, more and more companies are pursuing research on different compounds in cannabis and their use in treating different diseases and disorders. GW Jazz deal is likely a game changer for the industry, and there will be a continued interest from the pharmaceutical industry in this rapidly growing sector.